Welcome to the Isolation Podcast, Tim and Michael.
Thank you very much, Sam.
Thanks, Sam.
They've assured me that they've measured the distance between them.
Yeah, we're 1.5 metres
Exactly.
arm to arm and a bit more head to head.
Separated by some hand sanitizer as well.
So we actually just had a casual chat the other day, both being small business owners. So you guys are clients of ours, obviously, as well, around, how does a small business cope in times like this? I think we'll just make it clear that the advice, especially the advice I'm giving, is just things that I'm doing personally. I've got some good advisors around me helping, but I definitely go and seek good advice outside of me talking.
And just on that, Sam, I should also touch on that we actually operate under a credit license as well. So we need to give a disclaimer that what we talk about today is just simply our opinion, and it doesn't take any personal circumstances into consideration. So we will always recommend you go and seek professional advice.
There is a lot of misinformation out there, so I think what I've been trying to do, with my business hat on and just, also personally, is try and sort of get a fairly sort of broad cross section of media. So you're not just sort of, reading your Facebook wall. So the number one thing I think that I've found, quite quickly last week was the need to really go back and reflect on how the business is structured. What I've done over the last week is really dive into our sort of, cash flow position as of today. And looking at the pipeline over the next couple of months. So there's obviously lots of different businesses that are going to be impacted in different ways. We're in a fairly lucky industry, but what's your guys' thoughts on, as a small business and being one yourself, what was your sort of first port of call once you realized, this lockdown was happening and we can start seeing that this is going to be longer than a few weeks?
Pretty hard, Mike. So Mike's in charge of our everyday cash flow. My first port of call was a bottle of scotch, and I worried a little bit about it. But second port of call was to sit down with Mike and nut out the cash flow. So I'll let you give a rundown of what you went through.
Yeah, sure. So I think for ourselves and for a lot of small businesses out there, you generally got a reasonable amount of confidence in your short-term pipeline, and in normal times, maybe fair confidence in your long-term pipeline, but that confidence has deteriorated rapidly. So we went and prepared a number of budget cash flows based on a number of scenarios, assuming how bad does it get, even down to doing sort of 25% of the normal amount of business that we do for 12 months. And like, hopefully that's the worst case. I call that our doomsday budget. But, what does that look like? What are we in a position to personally tip in to keep things going, to protect our staff? Because we still need to be here to do what it is we're here to do, which is help our clients and work with people. So really we worked through that and what costs or projects that we wanted to do on the business that we can push out for the time being. But ultimately, a big part of that and getting comfort for us with the worst case sort of scenarios was understanding what the current round of government stimulus for small business looks like for our business.
I mean, this is one of those times where businesses that aren't budgeting or that, don't have a good grasp on their numbers, either themselves or with an accountant or a financial advisor of some sort, you do start scrambling and looking in and not understanding that. But if you can understand that, okay, what is going to cost us to operate at 75%, 50%, 25%, hopefully it doesn't get to that, you can start making some decisions around, well, how can we cut costs or look at other measures to, stay buoyant throughout those projections.
I think I probably should add as well, our business, we're very aggressive in business. We've always invested and backed ourselves to chase that top line revenue growth. So this is quite a change for us to actually have to sit down and take a step back and go, okay, well, the world's changed. Our investment philosophy hasn't necessarily from a long-term perspective, but the next 12 months is going to be tough. So let's put our heads together and actually try and work out how we can shape the business to be in the best position possible in that 12 months time.
put our heads together 1.5 metres apart.
Exactly right. Yeah. No, we kept it.
I've been saying elsewhere, but I think having that confidence, and you need to be agile and move with the market, whatever's happening outside that's outside of our control. But there's still a lot of control that we do have as businesses, and I think staying positive and putting out positive messaging, and still servicing our clients as best we can is what you want to be doing. You definitely don't want to be panicking.
And that's exactly right. And look, our business is going to change over the next 12 months. It's it's going to go from really being a deal center, a financial deal center, us pumping deals through lenders, our clients going out and acquiring properties and acquiring other businesses and acquiring assets, buying tippers, loaders, diggers, aircraft, all kinds of stuff. That's almost yesterday's business model for us now for the short term. Yes, we've got a few transactions on the go that will proceed, but now we really need to focus on us being an advice business and helping our existing client base and new clients get through this period with our expertise. And our expertise are around banks, funding, and money, ultimately access to cash.
I don't know, Michael, if you wanted to, I think there's quite a bit of confusion around the payment of up to, it was $25,000 initially, but now $100,000 for companies from the ATO. Do you want to go through how that works?
Yeah, sure. And once again, coming back to our disclaimer, this is my understanding of how it works, but it suggests that small businesses and people speak to their accountants about this. But this is the one that I'm probably most across for our circumstances because it's the one that applies to us. So initially, there was a stimulus package that was going to be based around the PAYG withholding component of employee salary primarily, and it was going to be effectively over this 6-month period refunding 50% of PAYG withholding up to $25,000. It then got revamped less than a week later to be 100% of PAYG withholding for the 6-month period, and it's calculated slightly different ways depending on whether the business pays their PAYG withholding monthly or on a quarterly basis. But it's effectively 100% over that period up to $50,000, and then that amount again split out over the next 4 months, up to a maximum of $100,000 in total. So that's ultimately that there's for small businesses anywhere between $20,000 and $100,000 worth of support over the next 8 months or so in terms of cash flow.
You probably should comment on the structure as well.
Sure.
So being a proprietary limited company as opposed to a sole trader is very important.
Yeah, that's right. So I think the support for sole traders will continue to evolve and emerge, but it is important to point out that sole traders aren't generally paying PAYG withholding, and so from what I understand, the support for them at the moment probably mirrors more so casual employees who have a reduction in work.
That essentially is going to come directly from the ATO. So SMEs or anybody operating as a proprietary limited don't actually have to do anything to receive that. That would just be a reduction, or essentially the removal of that PAYG component.
That's our understanding. For businesses that pay their PAYG withholding monthly, it seems as though they're going to ignore what's happened in January and February and base the first quarter on 3 times March. So if the March component has been a little bit higher, then there may be an actual cash injection from the ATO, I believe, to come 14 days after when the PAYG withholding was due. But in most cases, it'll just be that component's not being paid, which in reality could be 20 to 25, maybe even 30% of a business's employee costs during this period.
I probably just want to stress again, the importance of a cash flow here. So we're talking through what the stimulus is, but it's important that you get an understanding of, every business gets an understanding of what they're entitled to under this package, and then sit down with your accountant and actually short-term cash flow the next couple of months, and look at when these packages are likely to hit, and make sure you can keep the show going in between these payments. That's the main thing.
Yeah, and a good example is some other businesses that are entitled to some of the stimulus in areas that have been really affected by lockdowns or lockouts, or particular areas, and hospitality comes to mind.
Travel.
But in the hospitality space, you've got cafes that can't have people eat there, but they're now doing delivery, which is a good way to try to keep some cash flow going. But they need cash now, and this cash or this support will come over time. So I think, to reiterate Tim's comments, understanding your cash flow requirements in the near term and when this support is likely to
actually
have a positive benefit, it's really important, because it's all well and good to have that support coming, but I do worry about a lot of small businesses out there that it's going to come too late.
Having someone that's across those numbers in these times that you can just rely on and say, look, I need to put together a projection with these variables is really important, I think.
Absolutely. Oh, look, and we Mike does, as I alluded to, Mike does the day-to-day cash flow management and budgeting in our business, and it's a big focus for us because of our work generally has a long lead time, so we carry a lot of WIP. And we could be working on 200 or 300 grand worth of work that we won't get paid generally for 6 to 7 months. So we've got to fund that throughout that period. So cash flow for us is vital, and having an understanding of that daily cash flow is vital. And then just to call out, our accountants are great. They're a Crew Harris Orchard on Fullerton Road, and they support us amazingly on a day-to-day basis. Mike runs it from a day-to-day basis, but any queries he bounces off of the crew. So that's a gratuitous plug there for a crew. There you go. Free money.
Nice. They are awesome. I think it's definitely good having someone within the business that has their head across it as well. But yeah, having that support is really useful, even if it's just to get things set up initially.
Absolutely.
So
and probably now's the time for sole traders to actually start to sit there and think about, is that the appropriate structure for them? Especially if they're growing, they're looking to expand. They need to be having that discussion with their accountant as well. Is it a time to move out of a sole trader? I mean, the horse is bolted on this line of stimulus. You can't just change the proprietary limited and get the stimulus. Otherwise, it'd be run on those requests. But even so, it's probably a time for some of those sole traders that are growing really aggressively and quite large to sit down and start asking those questions and getting that advice.
So there's been a lot of talk, and I've seen some comms coming out from businesses sort of trying to capitalize on this around this talk of the loans. So essentially, in my understanding, what's come out, they're saying that the government's going to be backing 50% of the value of certain loans to increase lenders' willingness to provide loans to businesses. It's not something I'm looking at personally, but I mean, I know you guys know a bit more about this. I'd be keen to hear your thoughts from the financial institutions' perspectives, perhaps.
Yeah, so on the commercial side, so there's very much two different lines of communication. You've got the small business finance or the SME finance that they've made these commitments, but then there's also the retail side of things, or the home loan side of things, for people that are experiencing cash flow shortages and hardship. So on the business side, the banks, you've got to understand the banks have been beaten up from pillar to post from a reputational point of view since the Royal Commission. So they're trying to be very responsive and receptive to shocks in the market like this. But it is a branding thing. So from a marketing perspective, they came out and all pretty much have the same position, that they're going to look to provide up to a $250,000 line of credit for small businesses, and that's 50% government backed. And then they'll also look to defer commercial loan repayments for up to a period of 6 months across a bunch of different products that they have out there. And then they've also all committed to reducing interest rates as at the start of March, I believe, across a whole lot of products. But I need to stress that the devil really is in the detail here. That they've made these statements, but they're still trying to work out how they actually implement and process and roll out these statements throughout ultimately their distribution, their products. So all the banks are different in that regard.
Yeah, okay. So it's still early days, and I think going back to what you said previously, looking at that that self-reflection and getting a good gauge of what the short term and then longer term future looks like from a business perspective is more important now than going out and trying to necessarily borrow money.
Oh, look, we've had our phones have been ringing off the hook for clients inquiring about what the banks are doing in this space and what's available. Speaking around town to the bankers directly, they're getting bombarded with requests to defer repayments, even from clients that typically probably haven't been impacted by Corona, and quite honestly may not be impacted.
Sure.
They're viewing it as an opportunity to defer the repayments and build that war chest that you talk about. And our advice in this regard is to just take a breath, hold back a little bit. The banks aren't in a position to actually execute this at this point in time.
Okay.
They will be probably in the next day or so or weeks, but we still don't know what implications a client has. If a client defers their repayments, we don't know what implications that has on them or their future borrowing capacity. So if your business is reliant on funding, so if you need to go and buy capital equipment, or so if you need to go and buy trucks, vehicles, tippers, chainsaws, whatever, and you need to fund them on an ongoing basis and reinvest in your equipment. Taking a deferred repayment structure, we're not sure if you'll be able to defer your repayments for 6 months and then go and make these acquisitions and fund these acquisitions after that. Because there's an implication through some of these lenders of hardship as soon as you put your hand up and say, I want that package, you are flagging to the bank that you're under cash flow stress. Which is an important thing to know. But these tools are there. They're tools. They're tools for clients to use. But what we're saying is don't just take them. Do the work around your modelling and your cash flows and work out if you need them, and keep them in your back pocket, because if you don't need them now and you need them in 3 or 4 months' time, then you defer repayments for 6 months. It's likely when you come out of it, there's some light at the end of the tunnel. Whereas if you jump on it now, you might come out of it right in the middle of the real hard times. And we have a lot of clients that we feel are actually going to capitalise. As bad as it may sound, it may actually, the current market, they may actually capitalise in this current market. They're in very strong positions. They've got very strong balance sheets. They look for opportunities, and if there's a fledgling business out there that they want to acquire for cents in the dollar, or there's or you can go and get a semi-new Mack truck for 50%, they're going to do it. So, to hurt their ability to borrow funds to execute those strategies for the sake of a $250,000 loan, I think is silly.
Sure. Yeah, it just comes back to due diligence. Yeah,
and look, I mean, it's not, and I guess the details coming out at the moment. So if someone takes a $250,000 partially government guaranteed loan, that may have a different implication to deferring payments.
Absolutely.
Due to hardship, and to put it, I guess for some of the people who will be tuning in that may not be as across these products, and another one to look at. So with home loan repayments, the ability to defer them in most cases up to 6 months, that's currently accessed through the bank's hardship line. If people are experiencing hardship, it's there for them. And we do have some clarity that if provided people proactively communicate and they get back on track after that, it won't necessarily adversely impact their credit score. But through comprehensive credit reporting, it will still be visible that this has happened. And that's understandable. It's okay to be on the front foot. But if I personally had deferred my home loan payments for 6 months and then I make 7th-month payment, I wouldn't then expect another bank to immediately take me on with open arms, because they're going to want to see a period of stability after people get through this period to be comfortable that they're back on track and okay. So as to reiterate Tim's comments, these things are here for people that need them, and if you do need them, take comfort in that. But there's pros and cons to everything. So I think that the main thing is not just grab everything that's available, but take the time to sit down, work it out, and chat to whoever, chat to your accountant, chat to us, chat to anyone about what's the right way to go about it. We're certainly working with some clients at the moment and sort of tailoring a more bespoke solution about when might be the right time for them to take advantage of these things if they need to.
I think there's a nice analogy there to so around that sort of credit score to just from brand management as well. I think the same things in these times is really thinking clearly about how you want your business's messaging to go out to the world, and project in that position of confidence or whatever it might be you decide to do. But you don't want to be. I've seen a lot of, especially in my world, a lot of people sort of very quickly trying to capitalize on this and putting out what I think is some fairly sort of icky kind of messaging, trying to just, short-term cash grab around, let's say, social media from a business that has been impacted by the coronavirus. But then what's the long-term impact of that, in 4 months' time? So I think that your reputation from a financial lender perspective mirrors that from a brand.
It's all, and we want our clients, and I'm not shy in saying this, we want our clients to be viewed by the banks as really strong. We work with strong clients that are aggressive, that are growing, and that deliver what they say that they will deliver. So we really, these tools are there. Our clients will take advantage of them. They definitely will, but it may not be, we'll just take everything. It may be a case of, okay, let's sit down, let's work through the cash flows. Let's give a bank a really understanding of the management decisions and the tools that we're using externally from them to support the business and prop up the business during this period. And if we need to, we might take the ability of that 250 back government backed facility just as a bit of a cushion. But that's a very, very different conversation with a lender than you getting on the phone and saying, hey, I want you to defer all my repayments and I want that 250 and I want you to defer my home loan repayments for indefinitely, for as long as possible. Because, it's your reputation, you're exactly right, Sam, reputation is huge in lending. And if you can be seen at the end of this as having acted appropriately and had really strong financial management throughout this period, the lenders are going to look at you, lovingly in 12 months' time, as opposed to being a bit on the nose.
I like it when lenders look at me lovingly.
Yeah, no one looks at you lovingly, mate, especially lenders.
But I think also probably to follow up Tim's comments there about we do have quite a number of strong clients, but we also absolutely work with and value working with clients who aspire to be in that space.
Absolutely, sure. Absolutely.
So we don't have to be there yet.
Absolutely. So we do with startups. Young guys coming off the street, with a vision, we'll get in there and get our hands dirty from day one, all the way up to businesses that turn over a few $100 million. So, and we view what we do as having that experience across the broad spread of that kind of client base. We get our larger clients who've been through this process. We leverage off them and allow and really ask them to really assist our smaller clients who have those similar growth aspirations about how they're going to get it. So we do have services to assist the broad spectrum.
So if small and you're struggling, don't be afraid to pick up the phone.
Absolutely,
we still talk to you.
Absolutely. You're probably bigger than us, I can tell you.
So we were talking before we started recording briefly around investment properties. So my sister's in a position, her and her boyfriend have both lost their jobs over in Sydney. She's seeking clarification as the renter. What options she has from their landlord if they're unable to pay rent. But Michael, you had some information from from the investor's point of view, and I know a lot of small business owners do have investment properties. If their tenants are coming to them and saying, we can't pay rent, what options potentially do they have?
Yeah, absolutely. So because we've got, particularly on the home lending side, we deal with a lot of investors, and I use the term sophisticated loosely because there is a specific benchmark for a sophisticated investor. But we've got a number of clients that have a number of properties, and they've been doing this for a while. So I've been paying attention to it, been waiting with more or less bated breath for the government to come out and say exactly what they're proposing here. They are talking about potentially making it so that landlords can't evict tenants who aren't paying their rent during this period, which, I mean, there's going to be a lot of tenants in hardship, and it would be a terrible time for them to be homeless. But the same token, the government hasn't come out and said what that means for the landlords, because a lot of landlords are not necessarily wealthy people. They're people that might own a home. They've decided to buy one investment property, and that's their path forward. But they don't, they don't have hundreds of thousands of dollars in the bank or that sort of thing. So I think we need to see what some clarity is there. But from my understanding, there will be relief for renters, and there will be some sort of relief for landlords. Hopefully it's not just the 6 months of deferred homeowner payments. But so I was speaking to a client this morning, and because he sent me a text message. One of his tenants, or I should say his tenant, called him personally to say, look, I don't think I can pay rent anymore. My wife's lost her job, and I don't think we can pay the rent. So he called me to see what he could or should do about that. Now, he has some landlord insurance, but he hadn't spoken to them yet, and he has a property manager, but this conversation had happened directly between the tenant and the landlord.
Okay.
So the challenge there is in the absence of government support, which we don't know whether or not that's coming yet, he potentially will have some coverage from his landlord insurance for missed rent. But they're going to have some specific requirements around that, and he really needs a property manager involved in that also, to make sure that things are done in the correct process in order to qualify. So key advice around this: if you are a tenant who can no longer pay rent, there will be some clear guidance coming shortly, but probably open communication with the property manager would be a good place to start rather than the landlord directly. If you are a landlord, make sure that you're involving the property manager who understands the legal aspects, and that you're speaking to your landlord insurance provider. But certainly also in Adelaide, if people don't have a property manager, right now this would be the time to have one. So we can also put a link if people don't have one and want to talk to someone to Jump Property. They're a property manager that we recommend to some of our clients, just because they are professional and across the legal aspects, whereas some property managers we found are a little bit more hands-off. So we'll chuck a link in there as well. But the main thing is, at the moment, communicate through proper channels.
I think just to add to that as well, this is going to have wider implications as well in the commercial space, especially commercial tenancy. So the same way that an individual might lose their job and seek rent relief, there's businesses out there that are going to start to struggle and not be able to afford their lease commitments on their commercial properties. So, the banks haven't spoken much about this yet, but ultimately there needs to be some clear guidance from the government about what an investor from a residential housing investor and a commercial investor, because there's individuals out there that own large chunks of commercial property that are leased investments, and if their tenants come across hard times and they're required by law to, if they were to be required by law to give concessions in this regard, ultimately that potentially could significantly reduce the valuation of those properties too, which has huge implications on what we do in the lending space and funding appetite in the market. So there really needs to be some strong guidance from the government here. There's a lot more water to go under the bridge, but the key, and I know we're going on like a broken record about getting good advice, but you really need to, if you're in this space, if you're in the space of being a residential property investor or a commercial property investor at the moment, you might have been in the game for a long period of time, but this is, there's legislation that's likely to come out that's going to have implications that people haven't seen before. So you need to be across that, and you need to make sure that you're getting appropriate advice regarding that.
Yeah, across all levels, I think. So I think as a if you do have a commercial lease, then having that conversation, with your landlord or whoever it might be through at this point, and then going up the chain, everybody sort of having that conversation. It would be nice if we had some clearer guidance from the government. That would definitely help.
Yeah, and probably one area that, and you were probably going to come to this, Sam, but I know we were having a chat earlier around particularly for businesses that are needing to potentially wind back what they're doing on the staffing front. I think that's probably the nicest way you can put it.
Mm-hmm.
Is making sure that they're getting sound HR advice, because there's going to be a right way to do things, and there's going to be a whole lot of nearly right way to do things. And I think in this time more than ever, it's important to do things the right way. So certainly we've been having active communication. Just before this started, we've managed to recruit a really, really good staff member to start in June. Now,
perfect timing.
Yeah, now we've had a really good, open, honest conversations with that person, and we're all comfortable. They're working elsewhere at the moment, and we're comfortable that we're going to sit back and adopt a wait and see approach. But that start date has become quite rubbery. But through that time, we've taken and the staff members been really mature about that as well, which has been great. But we've taken advice from our HR advisors on that, and just to make sure that we're meeting our commitments to our people or future people, because I think that's really, really important. So I think on our end, that might be one last gratuitous plug for Laurie Bolton at Workplace Horizons, but he's been fantastic, and since I embarked as a small business nearly 5 years ago, he's been instrumental to helping us continually do the right thing with our staff.
Yeah, so
and it comes back to reputation, Sam, too, that you touched on. We want our business to be viewed as as a desirable place to work. We want people to seek us out, that want to work with us. We want a fun environment, and we want the best people to work for us, and we're prepared to pay for the best people. So, but it's a reputational thing for us too. So we need to make sure we're doing everything by the book with regards to HR, and that we're looking after our staff.
I'll just add in from my perspective, and this is my advice, outside of crazy times like this as well. But transparency is really important, I think, with your team. So I think if you want to build a good culture and build a business where people do want to come and work, having those open chats with people. So I think one thing about the situation we're in now, like everybody's in the same boat. It's not like certain people. I mean, obviously some businesses have been impacted more than others, but across the board, we are being impacted. So getting your team and having a conversation once you've done those cash flow projections about what does this look like from a in reality, so that there will be some tough decisions that business owners are having to make and are already making. But talking to your team. So one of the things that we're doing initially is getting some team members to take holiday leave that has accrued. I think actually having one-on-ones with team members about their personal situations too. You might find that some people with their kids at home now might actually be willing to go down to part-time, or take a few days out of their schedule. So you might not have to make those sort of, big redundancy decisions at this point. And really just sort of, keeping the dialogue open between everybody.
Yeah, spot on, Sam. I think well, hopefully everyone who's working are more or less adults, and I think it's all, if it wasn't obvious to people kind of the magnitude of what's going on at the moment a couple of weeks ago, it should be now or shortly. So I think everyone's expecting to be having these conversations, and the worst thing a business owner can do is just secret squirrel where the business is at, but actually just be open, as you said, and that does a lot for staff. If you're not sharing uncomfortable news, they're fearing that it's worse.
Yeah, definitely.
So, and if you are open consistently and honest consistently in tough times like this, staff will trust what you're telling them.
And I think it's worth adding. I mean, it seems to be the takeaway from our conversation. You really do need to get good advice. So making quick decisions. I think a good example here is leave without pay, which some business owners might be considering. There is documentation and certain protocols that you need to follow in that instance. You don't want to be in a position in 4 months' time where you've got an unfair dismissal case or something similar, or just doing the wrong thing by your team. So making sure that you're actually following procedure. Another quick one I'll add in is if people are working from home, which a lot of businesses are now, I believe while they're at home, they still come under some of your health and safety practices and other things within their home. So getting some good advice around that, and we've just added a new section to our handbook and contracts for team members. So there's a lot to think about.
Yeah, and that's particularly relevant at the moment with most businesses having people working from home where practical, and certainly we're still probably stepping it up in this space. One of the things that might come in handy, because there will be broad-reaching WHS implications when people end up with RSI or sore necks because they were sitting on the kitchen bar stool instead of a proper chair, and leaning over a laptop instead of a decent desk. So you can download these. I'm not saying that this will cover your business, so seek advice here, but you can download working from home self-certification checklist, and you can ask your staff to run through a checklist themselves at home and send that back in to say, they've looked at it and they do have an appropriate place to work. These are all things. I'm sure there are experts out there, and you should talk to them. It's in my mind, this is a little bit rubbery, but what is crystal clear is we still have a WHS obligation to our staff, no matter where they're working.
Yeah, you definitely need to look into it.
On that point, everything we're talking about here, you could go into details on every aspect of the business, but everything we're touching on, whether it's the financial viability of the business or the workplace health and safety, it's all about protecting the business during this time. So it's everything we're saying is, okay, the business is the jewel. It's what as business owners, our focus needs to be for the next 6 to 12 months, and we need to be across all of these things. So, we can take this business move this business down the timeline in 12 months' time, and there's not going to be an adverse claim against us because we didn't consider these types of things. So, protect. My advice is do everything you can to protect the cash cow, which is your business. And take a long-term view of it, and really do everything you can to navigate the next 6 to 12 months legally.
Yeah, I think that's a nice place to sort of close up here. I think that a lot of business owners are going to learn a lot through this period, but across all facets. But I think that we can come out of this stronger. So that's definitely the attitude I'm taking with my business, and it's going to be a challenge, but challenges are fun sometimes.
Exactly. Thanks for having us on.
Beautiful, guys. Well, I appreciate your time, and
Yeah. Next time we'll catch up for a beer or a glass of wine over Skype. So
exactly. Yes, we can't go fishing virtually, sadly.
no, that's right.
All right, guys.
All right, thanks, Sam.